Good afternoon and welcome to Biztech's Asian Midday Market Watch. We welcome market strategist Jeffrey Halley, Senior Market Analyst Asia Pacific at OANDA as our guest today. Now, Jeff, welcome to the show.
Always a pleasure, mate.
Now, I'm going to start with taking a look at crypto markets. Bitcoin is at 43,036. It's up 5.27%. Ethereum is at 3,031.94. It's up 6.56%. Now, if we look at regional markets, we start with the SGX close to home. It's at 3,350.05. It's down 0.16%. Across regional markets, we've got the KLSE, which is at 1,584.62. It's down 0.16%. But the rest of the markets, starting with Shanghai, are in the green. Shanghai is at 3,257.11. It's up 0.11%. The ASX All Ordinaries is at 7,630.1. It's up 0.94%. The Nikkei is at 27,231.5. It's up 1.5%. The Hang Seng is at 21,465.5. It's up 1.13%. And rounding up the numbers, we've got the Kospi, which is at 2,702.93. It's up 0.63%. Now, Jeff, what's your view on market performance this morning?
It's a little bit mixed, to be honest. US futures have continued moving lower. And so when we see regional markets such as Singapore and Kuala Lumpur, they're both slightly in the red, as is a market such as Taipei. The price action in Japan and Australia has been dictated by their central bank governors, who both came out today very dovish, and that's lifted equity markets but punished the currencies. The yen and the Australian dollar are both lower today. In Hong Kong, I believe that the news that Alibaba's increasing its buyback target to $25 billion has caused a slight rally in Hong Kong markets. But otherwise, across the rest of Asia, they are either just fiddling around each side of unchanged.
Now, Jeff, I think that the news overnight is Chairman Powell says inflation is much too high, so that's a big change in the narrative, and the Fed will take necessary steps to address this. What's your view on this now moving forward? That's a big change in tone.
Yeah, look, in December they were as dovish as can be, so I think they have a little bit of a credibility gap, to be honest. And their data, where they're assuming that the US economy will continue to grow even as they hike aggressively, is probably going to be come under some skepticism. It has already, to be honest. And given their vault face, I'm not really surprised the markets feel that way. He also talked about 0.5% rate hikes if necessary. And I believe Goldman Sachs came out today and priced in 2 consecutive 0.5-point hikes. That torpedoed US markets overnight and undid the rally there. We've seen oil prices sky high again overnight as well. Commodities such as wheat shooting higher. This is all due to the Ukraine war. I think this is going to be a tough environment for equities, even though we're seeing a few rallies in Asia today.
Now, Jeff, in your morning commentary today, what are some of your key concerns besides what we talked about that you've highlighted in your report?
Well, these are the most prescient ones, I believe. I still don't think that the market's really pricing in the full fallout, shall we say, of a very hawkish Federal Reserve. We saw the US yield curve move higher en masse overnight. It's still flattening, but it's moving higher at the same time. This has got to weigh on high-priced equities with high PE values, and I'm thinking of tech stocks in particular. We also saw Fitch downgrade world growth overnight. They weren't the first, but they won't be the last for sure. And I think actually the Q1 earnings season that we should see start coming out in April, it has significant downside risks now. Although profitability may hold up in Q1, it'll be very interesting to see what a lot of these major companies are saying about the outlook into the rest of 2022. And I don't believe now it's going to be good news. So I'm beginning to think there's some substantial risk there. Otherwise, it's a very quiet day in the world as far as data goes, and we're all going to be glued to the Ukrainian news ticker.
And do you think then, Jeff, I think one of the key challenges is the only companies that will really continue to have stellar growth are the ones with pricing power, because we're in an environment where cost is increasing, factor inputs are increasing. Those without pricing power will not have the ability to shift prices to consumers.
Yeah, definitely. But I do believe this environment is probably the first one in 20 years where quite a lot of companies have pricing power now. This is the first time, and I can recall in probably 20 years where we really are in a quite aggressive inflationary environment, not just across specific areas, but across everything. It's been exacerbated by this Ukraine conflict. And I don't think the market's really come to grips with that yet. And I think part of it is that they're conditioned to central banks easing at the first signs of trouble and pumping up asset prices. I don't think that can happen this time because we have an inflationary environment, and I don't think the full effects are being, or there's a lot of denial in the market about this new situation.
Now, Jeff, as always, thank you very much for coming on the show.
My pleasure.
Now, we've been speaking to Jeffrey Halley, Senior Market Analyst, Asia Pacific at OANDA, on Biztech's Asian Midday Market Watch. I'm Brian Fernandez. Please check out this video and podcast on our social media platforms, as well as our website, www.biztech.asia. Please like and subscribe to our various platforms. Thanks again for tuning in.